Hello, this is Brian Rezny, President of Rezny Wealth Management and host of the Rezny Wealth Report. We've got a great show for you this morning. Of course, we're going to be taking your questions. Whether you have a question about retirement income, whether it's about a specific investment, maybe you're not quite sure the current advisor you have is a fee-only fiduciary. Send us your questions. We will help you out. We want to make sure, whether you're a pre-retiree or retiree, that your financial questions get answered so you can make informed decisions around your finances, investments, retirement, and so on. Go to ReznyWealth.com and send your questions to Brian Rezny at ReznyWealth.com. Today's topic, investments to avoid. I've been managing money for over 30 years. I've seen a lot of carnage, people just like you who have been taken advantage of by the annuity charlatans of the world, by the banks, by the brokerage houses that all play these warm and fuzzy commercials, how they're your trusted advisor and how we exchange pictures of the kids, grandkids, and the dog. The bottom line, folks, is this. Brokerage firms, banks, and insurance companies or agents are there to sell you products that are better for them than for your portfolio. The only kind of firm you should ever entrust with your life savings is a fee-only fiduciary. Not fee-based, it's got to be fee-only. There's a lot of firms out there that do fee-based work, so sometimes they work in your best interest and other times they don't. So again, make sure they legally work for you and always get it in writing, fee-only fiduciary money manager on their letterhead. Have them sign off on it. This way, if they lie to you, you have legal recourse. Let's talk about some of the investments you need to avoid. On my hit list, the worst investments you could ever buy are annuities. Annuities are garbage. Never buy one. There's two kinds of annuities. There's called variable annuities, and there's called equity index or hybrid annuities. Variable annuities have investments, usually in the stock and bond market type investments, sub-accounts that basically fluctuate in value. They give you the opportunity to make returns similar, maybe less or more, than what the equity market or the bond market. The problem is they have crazy high expenses. So you take the risk of the equity market or bond market in a variable annuity, but chances are you're going to make a fraction of the return, but still take all the risk because the expenses are sky high. I often see variable annuities that have every single year, annual expenses between 4.5% and 5.5% a year, sometimes more, sometimes less. So imagine if your portfolio made 8% and your annual expenses are 4.5%. You're keeping 3.5%, but taking the same risk as the markets. That is ludicrous. The other kind of annuity is called an equity index annuity or hybrid annuity. These are sold often by these annuity charlatans that have these free steak dinner seminars. The pitch goes like this: make stock market type returns, get free money bonuses, and never lose money. Baloney. First off, you're never going to make stock market returns. Most of these equity index annuities, and I've studied them, I've written papers on them, and a lot of other smart people have also. Equity index annuities are designed to generate over a rolling 10-year time frame, probably 1.5% a year. That's it. The free money bonus isn't free. There's an expense ratio to get the free money bonus. Income for life, it's your own money getting paid back to you without inflation protection. These things are toxic and garbage. They're even worse than variable annuities. But why do people buy them? Because they get bamboozled. They get a sales pitch, and it sounds good. We all want some free money bonus. We all want to hear that we're going to make 8% returns. These are factual lies told to you by the annuity charlatans. Do not buy an annuity. There are better options for your money where you can either take less risk and have a lesser expense ratio and actually have an opportunity to keep more of your hard-earned dollars. Annuities are garbage. They're sold under suitability, and under suitability, that firm does not legally work for you. But they're going to tell you that they're a fiduciary office. That's not a fee-only fiduciary, folks. That's a salesman who's a charlatan who's going to rob you of your wealth and retirement security. Non-traded REITs. These are real estate investment trusts. These are often sold by the brokerage houses. Why do they sell them? Huge commissions. Like variable annuities that have high expenses and huge commissions, Non-traded REITs have lockup periods, high expenses, and high commissions. That's why the so-called advisor broker likes to sell them. Did you know you can buy a traded REIT, meaning a traded REIT you can buy today, sell tomorrow, get the same benefits of a non-traded REIT. But why do brokers not sell them? Because they don't make 8 or 10% commissions on traded REITs. They make 8 or 10% commissions on non-traded REITs. When you buy a non-traded REIT, by the way, a real estate investment trust, you can't get out. When things go south and you want to get out, you're locked in because they're non-traded. You could be stuck in these things like an annuity for 10 or 15 years without access to your money or limited access to your money. Don't do it. Again, there's better options for your hard-earned dollars. But again, people that sell non-traded REITs from the brokerage houses, they work under suitability. None of them are fee-only fiduciaries. So that means they don't legally work for you when they're selling you a non-traded REIT. Like an annuity, they're selling what's good for their pocketbook and bad for yours. Alternative investments, hedge funds, commodity type funds. You're often going to hear the word alternative. Your so-called advisor, hey, Bob and Sally, let's put some alternatives in your portfolio to curb market volatility. Baloney. These things are garbage. Hedge funds are garbage. Alternative investments are garbage. High expenses, again, rob your investments. They don't really create any real wealth. If anything, they're taken away from your wealth. But again, why do brokerage firms like to sell alternative investments? Because it lines their commission-greedy pocket. Now, I know your brother-in-law might be your current so-called advisor, but if he's selling you annuities, non-traded REITs, alternative investments, he works for a brokerage house or an insurance company, he's not a fee-only fiduciary, and he's probably taken advantage of your retirement, your portfolio, and lining his pocket more than yours. I'm sorry that the truth hurts, but it could even be your brother-in-law, your cousin, your best golf buddy from college. If they're not fee-only fiduciaries, they're not legally working for you 100% of the time, and they're not managing any money at all. If you want to learn the disturbing facts, I've been managing money for over 30 years. I teach investors how to protect and grow their wealth. The disturbing facts, most investors are shocked to learn. I have 2 workshops coming up, one in Naples, one in Fort Myers. If you have a $500,000 portfolio and greater, and you're a retiree or pre-retiree, you are questioning the direction of your portfolio. You want to learn the disturbing facts and how to protect your money and grow your wealth from bad advice and conflicts, attend one of my upcoming workshops. They're educational. They're powerful. You will be empowered. You will have control. You will know what to do with your portfolio, and better yet, what to avoid so the bad advice and those conflicts can be gone. Go to ReznyWealth.com. That's ReznyWealth.com. Click on our workshop tab. Times, availabilities, and the sign up. That's the only way to sign up for any of our workshops is via our website, ReznyWealth.com. I'm going to take a quick break. I'll be right back with more of your questions after this. Hello, I'm Brian Rezny, president of Rezny Wealth Management. Investors are getting smart. They are moving away from conflicts, bad advice, and being sold junk investments from firms that are not fee-only fiduciaries. Smart investors demand real advice and real money management 100% of the time. If you're tired of the financial runaround, download my groundbreaking report, 3 investment risks you must avoid now. And we're back. We're taking your questions. Of course, send them to Brian Rezny at ReznyWealth.com. Make sure you visit our website, ReznyWealth.com. Download any of our groundbreaking free reports about retirement, how to avoid annuity salespeople, about the economy, income for retirees, all the great stuff you want to learn and educate yourself. Go to ReznyWealth.com, and it's all free. Gail from Florida. My financial advisor says I can get out of my annuity, excuse me. I am very tired of the fees and I wish to put my money elsewhere, preferably where it is federally insured and accessible to me without going through a financial advisor. Even though returns would be less, I don't feel I was getting the returns on the annuity as quoted to me. Any suggestions? Gail, first off, when you're working with an annuity person, it's a salesperson. It's not an advisor at all. They can tell you any kind of rosy title they want. They're salespeople. They don't legally work for you. So you're probably told a lot of stuff. I can tell you half the clients that hire my firm have been sold 1 to 4 annuities, and I've yet in 30 years had somebody come in and say, I am ecstatic, I was sold this annuity. They're always angry and disgruntled, and finally when they get angry and disgruntled, then they call my firm for a second opinion consultation. So what I will tell you is this: if you're conservative, you don't want lockups, and you want to have your money protected, go to the bank. Buy yourself a 2-year CD for half your money and a 3-year CD for the other half. There's nothing the matter with being conservative. You're not going to make a lot of money. And again, you said you don't mind making less. You realize that. So go to the bank, buy yourself a CD. But when you go to the bank, remember, all these banks now sell annuities, and they have the broker sitting there behind the desk. They don't work for you. They're selling you products. So if you go in there looking for a CD, don't let them talk you into another crummy annuity, because that's what the banks all do. I can tell you it happens to me every time I make deposits. They ask me, well, you got big deposits. And I go, don't you look at the name on the checking account, Rezny Wealth Management, and it kind of cues them in. Bottom line is they're always trying to sell something to banks. Remember the one last year that was fined billions of dollars for misdoings to thousands of their clients? That's every bank. So remember, go there, tell them what you want. Don't let them sell you what they want. Dean from Fort Myers, Florida. What do you think of Trump's trade wars and the impact on the economy? Generally speaking, I'm not a fan of trade wars, but I will tell you this. None of the previous administrations, whether it's the 2 Bushes, the Clintons, Obama, it doesn't really matter. None of them did anything on trade. They all dropped the ball, every one of them. This president's actually doing something about it, and I will tell you, whether you like the president, whether you're Democrat, Republican, his policies are starting to work. Now, again, trade wars are never a great thing, but the problem you have is this. China is not only ripping us off with intellectual properties and all kinds of other things on the trade side, they're ripping off the rest of the world. This has gone on for 3 or 4 decades. So don't think this is something new. The problem is our politicians are politicians for a reason. It's usually to line their own pockets. We need to confront trade, and China is the most abusive trading partner we have. They are, again, ripping us off. We have to fix that. There's ways you can do it. Are there better or different ways? Maybe, potentially. But the job is getting done. Let's hope it gets done sooner than later. But again, remember, there's other countries we'll be going after next to make sure we have fair trade for both sides, not unfair trade. And this president, in my opinion, the policy that he's doing is spot on. You need to confront this. Somebody's got to do it. Past politicians didn't, and somebody needs to do it right now. Betty from Burr Ridge, Illinois. When a recession eventually comes, how would that affect BKLN PowerShares senior loan portfolio? Betty, excellent question. BKLN senior portfolio is really on the lower end of the quality of bank loans. So what that basically means is it's almost kind of like a high yield or junk bond type fund, but they're bank loans. People that have not quite as good credit on the corporate side. So generally speaking, what I would say is BKLN is probably fine to own when you are in a growing economy. If for some reason the economy starts to get overheated and roll over into recession, BKLN will probably get hit and could get hit pretty hard. So I would say you do not want to own something like loan portfolio type investments in a recession or a pending recession. You would want to adjust your portfolio, raise cash, short-term treasuries, things of that nature. Upcoming workshop, folks, the disturbing facts most people are shocked to learn. The true cause of poor investment returns and how you can fix it. I'm going to talk about how to grow and protect your portfolio from conflicts and bad advice. If you have any doubts about the ability of your current advisor, or you're questioning the advice you're getting because you're learning from my TV and radio shows, and you have a $500,000 portfolio or greater, you should attend one of my upcoming workshops. I have one coming up in Naples and in Fort Myers, go to ReznyWealth.com, click on the workshop tab. Times, availability, and the sign up. The only way to sign up for any of our workshops is via our website at ReznyWealth.com. You'll learn a ton. You'll learn how to protect your portfolio, how to avoid bad advice and conflicts from the Wall Street firms, the banks, and these annuity charlatans. Protect your wealth. I'm going to take a quick break. I'll be right back with more questions after this. Hello, I'm Brian Rezny, president of Rezny Wealth Management. I've managed money professionally for over 30 years. The biggest mistake I see investors make, being sold an annuity. Annuities are sold on blatant lies, fake free money bonuses that never materialize for you, the consumer. Before your retirement gets ripped off by an annuity salesman, get my free report, Why Annuities Are Dangerous to Your Wealth and Retirement. And we're back. We're taking your questions. Send them to Brian Rezny at ReznyWealth.com. Make sure you do visit our website, ReznyWealth.com. Download any of our groundbreaking reports. They're all free. Our #1 downloaded report, 3 investment risks you must avoid now. Larry from Florida. Brian, how much upside do you think is left in the market? Larry, that's a great guess, and nobody can really answer that. I'll answer it this way, though. In the short term, the next 1 to 3 months, who knows? The market could be up 5%, it could be down 5%, or somewhere in between. But if I look at the next 3 to 5 years, and assuming we continue to grow the economy, which I firmly anticipate we will, the market will potentially be quite a bit higher. Remember, the market goes up, stocks go up if you have earnings growth. If earnings grow, you have the potential for stocks to go up in value, hence the stock market should be higher. We currently like the U.S. marketplace most. I would continue to avoid places like Europe and the emerging market economies, especially Europe. These are no growth or slow growth type economies, in and out of recession, it seems, every other year. But I will tell you this, investors have to realize normal volatility inter-year of all asset categories, it happens every year, folks. So just because you have some volatility doesn't mean that the market may not be higher. The key is this, if the economy is growing, there's an opportunity for that equity market to go higher. So if we get a short-term inter-year pullback and you've got some extra capital to put to work, that's usually a great time to do it. Dean from Naples, Florida. Our portfolio, $850K in stocks and mutual funds. My question is, we seem to have as much volatility as the market, but our returns are way less, like 3% less based upon the S&P 500 from what I can tell. Our advisor says that is normal for a dividend portfolio. Your opinion. Dean, what I would tell you is this, 3% less annual returns than the stock market, the S&P, with the same volatility, that's not good. Your advisor is telling you that's normal for a dividend portfolio, then why invest in dividend stocks? It makes zero sense. What I will tell you is this. Your advisor may not really be an advisor. It could be somebody from one of the Wall Street firms, banks, or insurance companies who really is just selling you product. That could be #1. #2, dividend stocks. Not all stocks pay dividends. Remember that. Some do, some pay a little bit, some pay more. Having a portfolio of just dividend-paying stocks is a mistake. You need to look at all stocks and utilize the stocks in your portfolio that make sense now. Sometimes stocks that grow earnings faster than the S&P in general that have no dividend are much better places to invest. Other times, value stocks and maybe dividend stocks are a better place. I will tell you this, value and dividend stocks have underperformed growth stocks probably for almost a decade now. That could continue for a long time. A lot of dividend stocks tend to be banks and insurance companies, which I would say you want to have a tendency to avoid right now, given where interest rates are. So it could be that you're not looking at everything in the portfolio or the opportunities that could be in the portfolio, and you're too centered on dividend stocks, which I've seen a lot of retirees make that mistake. Well-rounded opportunities are often better than one-sided people on a ship that ends up flipping over. Ken from Fort Myers, Florida. We have 2 Lincoln Choice Plus variable annuities. I really don't understand the expense ratio, and the annuities have performed poorly over the last 5 years. We invested $250K, now worth $257. We have procrastinated coming to see you for a second opinion. Help, can I get out? Ken, I'm going to talk about annuities in general because without looking at your Lincoln Plus choice annuities, I don't know what options you have, so I can't give you the exact expense ratio. But variable annuities in general, we normally see expense ratios that average 4.5% to 5.5% a year, sometimes 3.5%, sometimes more. What I will say to you is this: variable annuities, in my opinion, are garbage. I would never own a variable annuity or any annuity. Annuities are sold under suitability. They have crazy high expenses. Those high expenses take away from your return. I'll give you an example. Let's just assume the stock market and you're invested, let's say in the stock market within your variable annuity, goes up 8% this year. If your expense ratio on your annuity is 4.5%, how much are you keeping? A lot less than what the market made. But you got all the volatility. Now, every single year you own it, you're giving up that big expense ratio to the insurance company for that variable annuity for what? These things are sold, they're not bought, and often people that buy them don't understand the expense ratio. You get involved, you get locked into surrender penalties, high expenses, mediocre investments. Annuities are garbage. They should be avoided. I would say to you this, Ken, call our office, schedule a consultation. It's time we take a look at what's really going on in your overall portfolio, not just the annuity, because my guess is you own other investments, and the same thing could be happening to those. Go to ReznyWealth.com, give us a call. We'd love to help you out. We've got 2 upcoming workshops, folks, one in Naples, one in Fort Myers. If you're like Ken, if you have concerns about investments you own, we're going to talk about the disturbing facts most investors are shocked to learn. The true cause of poor investment returns and how to fix it. We're going to teach how to grow and protect your wealth from financial abuse from banks, brokerage houses, and these annuity charlatans. If you care about your wealth, this is the best education you will ever get to help secure your retirement. You'll learn what to do and what not to do. So again, if you've got a $500,000 portfolio or greater, if you are second guessing what's going on in your portfolio, you're realizing things don't seem right, come to my upcoming workshop, either Naples, Fort Myers. Go to ReznyWealth.com, click on our workshop tab, times, availability, and the sign up. The only way to sign up for any of our workshops is through our website at ReznyWealth.com. Kim from Miami, Florida. What do you think about Apple? I think Apple's a great company. It's a potentially decent stock to own for an individual, but I will tell you this. Just because it's Apple, that's why people buy it, because they've heard of Apple. Maybe you should buy some, maybe you shouldn't. I'm going to ask you this, Kim. How big is your portfolio? And do you have the time to spend at least 1 to 2 hours minimum a week researching everything about Apple, earnings, growth rates, how the company is structured, different products, all the things that are going to contribute to whether or not it's a good stock buy in the future or you should be selling? Most people do not. What I would say to you, instead of buying individual stocks, which I think is a mistake for the average investor, look at ETFs, exchange-traded funds. It's a broad market basket of sectors or the market or areas that you may want to do research on. And to me, it's a better opportunity because you're well diversified and you don't have to buy individual stocks and spend the time that most people don't have the time, discipline, or talent to do. Sam from Cape Coral, Florida. Will U.S. tax reform lead to growth or inflation? Sam, I'm going to answer the second part first, which is inflation. The biggest problem I think the Fed has had, the Federal Reserve in the U.S., is really getting inflation over 2%. You want some inflation, but you don't want hyperinflation. Then the Fed will usually raise rates to curb the economy. We're having a problem really staying even around 2% inflation, so I don't think that's a problem. But will the U.S. tax reform, does that help growth? It certainly has. If you take a look at how the U.S. economy has actually grown, reduced corporate tax structure, reduced taxes to you, the consumer, puts more money in your pocket. You are a better spender of your own money than the federal government. The problem is government is tax and spend, it gets wasted. You, the consumer, are a better spender of your money and investor. So I'm going to tell you this. As far as I'm concerned, tax reform is always positive for growth. And as long as it doesn't get overheated, Inflation should be at bay. We should have an economy then, hopefully, that will weather the storm, and hopefully in the next 3 to 5 years will be potentially higher. Fred in Naples, Florida. My wife and I, both 67, recently retired. Our advisor wants us to put $700K into an equity index annuity for lifetime income. How can a retired protect themselves from inflation? Will this help? Fred, don't do it. Your advisor is a salesman. They're not an advisor at all. They're a salesman. Equity index annuities are the junk of annuities. Don't do it. First off, that lifetime income has no inflation protection. So you're basically getting paid back your own money. Do the math. How much money are they telling you you're going to get a year out of your $700K? It'll take you almost 20 years, Fred, to get your own money back. Not a return on your money, a return of your own money. Then, you're 67 now, at the age 87, if you and your wife are still alive, then the insurance company will pay you their money. But it's the same money that you've been getting for 20 years. No inflation protection. These things are garbage. Avoid annuities, avoid equity index annuities. In fact, Fred, go to my website, reznywealth.com. That's reznywealth.com. Download our groundbreaking report, Why Annuities Are Dangerous to Your Wealth and Retirement. Read it. Annuities are garbage. They're toxic. They're a ripoff. They're sold by annuity charlatans. Most of these guys do these free steak dinner seminars. They get unsuspecting seniors in. They sell you this garbage, often using blatant lies and misinformation that you don't understand. Once you get into these things, you could have a surrender penalty that could go 10, 15, 20 years to get all of your money out without penalty. That is crazy. Income for life is a joke, and these bonuses they talk about are worthless. We have 2 upcoming workshops, folks. The disturbing facts most investors are shocked to learn. One in Naples, one in Fort Myers. It is perfect for pre-retirees and retirees. If you do not want to be taken advantage of, or maybe you're realizing from the educational shows I do on my radio and TV, have educated you to the fact you're realizing maybe you've already been taken advantage of, come to our workshops. Go to reznywealth.com. Folks, I am out of time. I appreciate all your questions. Rezny Wealth Management, real advice, real money management 100% of the time. Stop settling for bad advice. If you're concerned about your portfolio or the advice you're getting, if you have $500,000 and greater, call my firm for a second opinion consultation. Let's talk. Let's see what's going on with your portfolio. Let's see how we can get you back on track. Remember, bad advice doesn't fix itself. And never trust a Wall Street firm, bank, or these annuity charlatans with your wealth. Fee-only fiduciary money manager is the only way to go. We appreciate your time. We'll see you next week.